You know, for years, when you thought of Japan Tobacco, or JT, you probably thought of one thing, a classic high-dividend stock. Super reliable, super predictable, and maybe, just maybe, a little bit boring. Well, that whole story just got thrown out the window. So let's get right into this incredible comeback.
Okay, let's just start with the number that completely blows up the old story. Look at this. Adjusted operating profit is up almost 25%, year over year. Now, for a company this big, in this particular industry, that's not just growth, well, it's an explosion. It just shatters everything you thought you knew about them.
And that brings us to the big question, right? A company like this, a stable dividend stock, it's supposed to be predictable. They're not supposed to do this. So what on earth is happening? What's the secret sauce behind this record-breaking surge?
All right, let's unpack this high-dividend stock's incredible comeback story.
I think this really nails the whole situation. On one side, you have the myth, the story we all bought into for years. JT is a reliable dividend payer, sure, but it's in a dying industry with zero growth. But the new reality? It's a global powerhouse hitting record profits, and it's all thanks to a totally new engine of growth. It's a night and day difference.
So, to really get how big of a deal this is, we gotta look back for a second. Let's talk about that old stable stock story. Because for a while there, it wasn't looking so stable. Yeah, if you look at the period between 2016 and 2021, things were not great for JT. The stock price was just sliding down year after year. By 2018, profits were seriously dropping. And if you were an investor holding on for that dividend, you were definitely starting to sweat. And you know what? You had every right to be. And here's the number that was the giant flashing red light for everyone. By 2020, the company was paying out 89% of its profits as dividends. Let me say that again, 89%. That is not a sign of a healthy, strong company. That's a sign of a company under massive stress, basically scraping together every penny just to not cut that dividend. And then, everything changed. There was one key innovation that started to flip the script entirely. So let's talk about the new engine that powered this whole turnaround. Heated tobacco. So what exactly are we talking about? Well, heated tobacco products, or HTS, are these devices. You've probably seen them that heat up little tobacco sticks instead of burning them like a regular cigarette. They're part of this bigger category the industry calls reduced-risk products. And honestly, they are the absolute heart of JT's new comeback story. Okay, I love this sequence of charts. The first one shows exactly what you'd expect, right? Traditional cigarette sales, they're going down. It's a slow, steady decline. This was the problem. This was the reason for that old, boring, stagnant growth story. But then, look at this. During that exact same time, sales of their heated tobacco products just took off like a rocket. It's a classic S-curve adoption, just explosive growth that is going in the complete opposite direction of the last chart. And this is the money shot right here. When you put those two charts together, what do you get? The insane growth in heated tobacco has completely, and I mean completely, canceled out the decline in regular cigarettes. JT's total sales volume isn't shrinking anymore. It's stable. In fact, it's actually starting to grow again. This is the game changer that so many people are just now starting to realize. And listen, this isn't just some abstract trend on a chart. We're talking about real products. Their latest device, the Plume Aura, is a monster hit. Initial sales were moving 3 times faster than their older models. That shows you their innovation is really clicking with customers and just pouring fuel on this fire. Okay, so heated tobacco is huge, for sure, but it's not the whole story. To really get what's happening, you have to remember that Japantobacco is a massive global machine. I mean, yeah, the name is Japantobacco, but don't let that fool you. This is an international beast. Over 70% of their revenue comes from outside of Japan. You have to get that, because this global footprint is totally central to what's happening right now. And that global business is just firing on all cylinders. I mean, first, they're making smart M&A moves, like buying Vector Group to finally get a serious piece of the huge U.S. market. Second, they're showing they have real pricing power, raising prices in important places like the Philippines, Russia, and the UK. And third, of course, you've got the currency tailwind. With a weaker yen, every dollar, every euro they earn overseas is suddenly worth a whole lot more when they bring it back to Japan. It's like a bonus on top of everything else. So we've got this great business story, but how does that connect back to why people bought the stock in the first place? The dividend. Let's see how all these profits actually fuel those dividend checks. All right, just a quick refresher for everyone. The dividend payout ratio, it's just the slice of the profit pie that a company gives back to its shareholders. Simple as that. Now remember that terrifying 89% figure from a few years ago? Well, things are very different now. JT has a super clear policy about this.
And here it is, 75%. The company is committed to a target payout ratio of 75%. That's their number. And having a simple rule like this makes everything so much more transparent and, frankly, predictable for investors.
This creates a really simple and powerful pipeline. It's beautiful, actually. Step 1. The business kicks butt with heated tobacco, pricing, all that stuff, and earnings go way up. Step 2. They hit record profits. Step 3. They just apply their 75% rule to those bigger profits. And step 4, what's the result? The dividend goes up. They've already bumped the forecast from 194 yen to 208 yen per share. The takeaway is simple. As long as the profits are growing, the dividend is going to grow right alongside it.
Okay, so this whole turnaround from a struggling old-school value stock to this new profit machine, it's created a really interesting new question for investors. The old lens for looking at JT, it's broken.
And this table lays it out perfectly. There are two ways to look at JT stock today. On one hand, you could see it as a stable value stock. The dividend yield is about 4.5%, which is solid, but hey, it's been higher. But on the other hand, you could see it as a new growth stock. And from that angle, that 24.7% profit growth is everything. That suggests you could get stock price gains plus a growing dividend. That's a totally different ballgame.
And I think this quote from one of our sources really nails it. The perception of JT stock has completely changed. Investors are starting to notice that profits are growing for a new reason. That's it, right there. The market is waking up and realizing this isn't your grandfather's JT anymore. The growth is real and it's coming from a whole new place.
So that leaves us with the big final question. Is Japantobacco still just that stable, predictable value stock of the past, or has it actually transformed right in front of us into a legitimate growth story? The answer to that is going to decide everything for its future, and it's a question that every single investor now has to ask themselves.